put the spotlight on KPIT Tech. This time the company did come out with its earnings, where in the constant currency terms, the revenue has seen a growth of almost 0.7%. The profits see a jump of almost 31% on a sequential basis. So let's try to understand what is the way forward for the company. And for this, we are being joined by Sachin Tekekar, who is the President and Joint MD of KPIT Technologies. Hi, Sachin. Good to be speaking with you. Firstly, Sachin,
you and thanks for having me.
Thank you so much. But Sachin, firstly, it seems like a great set of numbers indeed, given the uncertain macro environment that we are in. But believe that the company has held back its guidance for this time around. So help us understand that how do you see the demand environment overall? And are we in to see a better quarter from here on? If you can't talk numbers, give us some sense that where is the industry headed?
All right, let me give it a shot. First of all, let me just say that we are very happy with what we have achieved in the last financial year. In what the market situation was, we did really well on the top line, and we were one of the few ones who actually held on and actually increased the bottom line. So we are very proud of what our employees have done last year. Having said that, now let's talk about the new year. In Q2 of last year, we actually talked about the chaos that was happening, the pressure on our OEM clients from China. In Q3, it became apparent that there was going to be even more chaos with all the tariffs and the trade issues. However, for us, the dust started to settle down a little bit. And I have to say, at the end of Q4, where we sit now, we see a lot more clarity. Having said that, we want to wait a few more months to see for it to further settle down before we can actually talk about any guidance. Having said that, the pipeline has never been healthier. As you can see, it's increased substantially from the beginning of the year, and Q4 was the biggest. And the conversations have been great. You probably heard about the press release about our partnership with MBRDI for Mercedes-Benz. That's one of the large long-term engagements, and we'll have at least one more coming up very soon. What's taking a little bit longer is you can imagine what the OEMs are going through. And, being their trusted partner, we've been very sensitive to what they've been going through. Now, there are specific areas that are emerging where we know that they need help. They need to scale up now in some of the markets, given the pressures that they are feeling in China specifically. Secondly, there are production programs that are going to be going to start a production in next year or two. I think they need further help there. So given all of this, we remain very positive about how the year is going to be
So if I can just connect the dots here, are you saying that, look, first half, which is this quarter and this next quarter, there will be perhaps uncertainty, but second half of the year, once we know that where tariffs would move, what will happen to auto companies, auto sector per se, you expect a significant ramp up. So flat 2 quarters and then a J curve. Is that what you're indicating?
What I would say is, there is a lot more action. There was a lot more action in Q4, and we'll have increasing action in Q1 and Q2 with conversations. We think that, to your point, the H2 is going to be much brighter than H1.
Businesses which you are in are largely dependent on the auto sector. Auto companies don't know what is going to be the tariff, especially the European auto companies which you work closely with. So when you are pitching a project to a client, what are they telling you? Let's talk, or let's wait, or they are not even talking?
Actually, they've moved on now, and there are really great conversations that are happening. Number one, I think the tariffs will settle down in due course. Having said that, people have actually, most of the OEMs in Europe, they have created their own plans. if you look at what's happening in China, that's where they've taken the beating. They had a large market share in China, and that's gone down dramatically. So how do they sort of hold on to the market share in China? And second part is, what do they do in terms of the tariffs? The European OEMs are far more diverse in terms of their spread across the world as compared to some of the Japanese ones and so forth. So from that perspective, the conversations with the European OEMs are very positive. Their focus is actually on reducing the cost of their vehicles, and the conversations are in regards what can we do in their current production programs to reduce the cost of their, not only the software, but also the overall vehicles. That's definitely their priority at this point in time.
Right. Sachin, so let's talk about what's in the bag. And you closed this $280 million worth of deals this quarter. Tell me how much of that is going to start contributing towards your revenues from this quarter itself, and how the deal ramp up for, is looking like, the entire cycle that is.
Some programs have already been initiated, like the one with Mercedes-Benz. Actually, it got started in Q4, but this is when the transition is happening, and now transition is almost done, and we'll have business coming our way. We will also initiate programs with at least 4 new OEMs. 2 of them are from trucks. One is from off-highway and one from passenger car. What is challenging is they're trying to consolidate their business from multiple vendors. They have different infrastructure and so forth. And when they consolidate that, that's a lot of work that they have to do. They have to get their ducks in line. That's something that they've been doing for the last 1 or 2 quarters. So we believe that things will start to take off in Q1 and Q2, and we'll see the full impact of that in the second half of the year.
Sachin, tell me a little bit more about the size and strategic importance of engagement signed with Asian and European OEMs as part of your de-risking strategy, perhaps.
So overall, if you look at what we are thinking is, it's important to have a more broad-based growth. What I mean by that is bulk of the growth over the last 3 years, where the growth has been tremendous for KPIT, has been on the back of 8 to 10 OEMs. And we've been talking about T25, but most of the T25 will start to fire during this financial year. And they're going to be balanced across the 3 geographies, Asia, Europe, and the Americas, specifically the US. And we believe that the growth is also going to be fairly well balanced across the 3 sub-verticals in which we operate: the automotive, the passenger car side, the truck side, and the off-highway side. From the Asia OEM perspective, of course, we've seen a tremendous growth in the last financial year in Asia. And we believe that we'll see more growth specifically in India, Japan, and over a period of time coming from China. Having said that, we also believe that there will be quite a bit of growth coming from Europe, and we'll have growth coming from the US as well, because more and more, some of the key off-highway players are actually in the US. So net, I think we'll see broad-based growth coming for KPIT during the current financial year.
Appreciate your time, and thank you for joining us.